I actually have a question on the access to capital front, but first of all, we've been talking about payday loans. Everybody here, raise of hands, everyone knows what a payday loan is? Or maybe we should do it the other way around. Does anybody not know what payday is? Don't be shy. Okay, so everybody knows. I think one person doesn't. Do you just want to just quickly say the basics of what a payday loan is?
Sure. I mean, payday loans generally are short-term loans at high interest rates. And again, the example I put forward was 200 to 400%. That oftentimes those who are unbanked, who don't have banking accounts, use to try to get from one paycheck to the next, but then find themselves in further and further debt at an interest rate that they have a hard time pulling out of.
And I wanted to just raise that on payday because back to Alejandra, which is within the small business community, what's your view on the fact that working capital loans, which are short-term loans, are available to small business owners at super high interest rates? It's not called payday because it's not structured the same way, but from a substance point of view, and oftentimes minority business owners are the main, I don't want to say target, but they're a high consumer of these short-term, super high risk, super high interest rates. Why it is there is because there's not regulation around it. What's your view specifically on that in terms of the experience you're seeing with small business owners and your thoughts on that as an issue?
So I'll start with what we are considering the solution. We're working with many more financial institutions within the $50,000 to $250,000 range. The smaller loans are either through SBA or through some of the organizations that are working with microfinancing. So that tail of the spectrum has some activity happening. My concern is the $50,000 to $250,000 loans, which are the loans that really help you grow your business. Our agency is focused on growth. So we're working on that with the more traditional institutions, but also, as I said again, with my colleagues in the Treasury Department, because these are either policy or regulatory efforts that need to take much more of a central focus. So at this point, it continues to be a problem, but I feel confident that within the next couple of months, we will make some much more headways because it's the stumbling block in terms of growth.
In terms of the issues that all the panelists have raised, with the constituencies that you represent in your communities, where you live, the folks that you interact with, do you feel that there's a sense of urgency around these issues? Raise of hands. So you don't feel that there's a sense of urgency around these issues. Okay, so that was my first question. Yeah. And then the second question to you all is, and each of our panelists have made different reference to it, theoretically in the laws of the land, theoretically in this land there are laws which should protect and prevent against some of the biases and, for lack of a better word, discrimination that our panelists are talking about. So one is the Fair Lending Act. Bill talked about CRA, which is the Community Reinvestment Act. Do you feel that those, from your experience and what you're observing and hearing, how effective do you feel those are? Raise of hands. Raise of hands if you do not have an opinion on it. Don't be shy. So all of you have an opinion, but you don't think it's, so then do you think it's ineffective? Okay, and I hope you all didn't just raise your hands as a default before I start to pick on people. So as that sort of into our lead-in, Bill, if I can ask you to talk about community reinvestment, because one of the things Bill talked about is the fact that branches are closing. So Bill, if you could kind of share sort of the quick about what the Community Reinvestment Act is supposed to do, and therefore what it's not doing, and can we lobby to get it fixed? Enhanced, something.
Sure. CRA also relates to the question that you just asked about access to capital for small business loans, not just small loans, but loans in general. It's been documented that as bank branches increase, then access to business lending. Business loans increase, as does the rate of high-cost lending for home mortgages decreases. So that there's a direct relationship. CRA was created as a response to redlining. It was established at a time when the banking environment was very different. It requires banks to affirmatively invest in, lend to, in areas where they extract deposits, and that was determined by establishing assessment areas. The assessment areas determined by where they have branches. Yep. Well, as we know today, you don't have to go to a branch to get a loan. I think there was a study recently I read that said that a third of the population hasn't gone into a bank branch in the past 6 months. And so the CRA is important, but it's dramatically outdated. It needs to be modified. The assessment areas ignored. There's a big donut hole around my part of the country because there's no mega banks that have a presence in the Mid-South, and those are the banks that are going to be more deliberate about investing in community development. They understand they have CRA departments, but because they don't have branches in the Mid-South, even though they own a lot of mortgages, there's a lot of revenue generated, extracted from that region, they are not required to or held accountable to invest in many of these communities. And the same thing is, as I said, a disproportionate number of bank branches are closing in low-income census tracts. And if you don't have a branch there, then the banks aren't as held as accountable to invest in those communities. I think there's a hesitance among the administration, among folks in Washington to open up the reg, because they're concerned. They've heard, we talked about today, how so many blame CRA for the mortgage crisis, which is a bunch of crock, but that doesn't stop it from becoming an issue if the reg's open. And so rather than open up the reg, there's been attempts to issue guidance and letters to address it, but that is inadequate until the banks are held accountable to invest in low-income communities and in communities of color. It's been my experience. Well, CRA has never been effective. It's been less effective since the recession, and so there's a need to come up with solutions that change that dynamic for low-income people.
And what would those solutions be?
Again, I think we have to be bold. I think again we have to hold all of our elected officials accountable. CRA is broken. It needs to be fixed. The only way to really fix it is to open up the reg and change it and take it out of the 60s and the 70s rather was I think when it was created to make it a modern day effective piece of law.
And if I can just make a quick comment, I mean, I think that's part of the challenge, right, about dealing with solutions. I mean, when you start talking about great new federal legislative changes, the big concern is that any change that's going to happen is just going to be worse than what currently exists, which generally has not bridged much racial inequality and has actually been regressive overall in terms of growing economic inequality. So, I mean, you can put forth some ideas. I think that's important to hear the ideas of what type of new laws and legislation could theoretically deal with the issue, but it doesn't seem that America's close to. I mean, Obama couldn't even get an American Jobs Act passed, much less something that's seriously dealing with the financial challenges and the lack of investment that is happening for most Americans. And two, I just want to comment on, I mean, I think, you ask most people, is access to financial, services, resources your primary problem? The answer, if you don't have a job, then of course that's not your problem. Or if you don't have enough, if you're not in a living wage job, you don't think my primary problem is I need, again, greater financial tools. You're thinking I need better pay, I need more stable income, these types of things. So I think that is one of the challenges of these issues, is that so many people are facing more immediate financial crises. They have a hard time seeing some of the kind of longer-term tools that need to be developed to also create a more equal playing field.
But actually, you just made a comment about regulation and the public perception of regulation, and somebody in the audience actually had a question directed to you, which is around regulation. Is more regulation the answer, and what should that look like?
I mean, yes, we do need more regulation, but of course you need, also good regulation. I mean, I do think, NAACP has done a lot of positive work with CFPB, and we've seen that the way it's been attacked, that there's great concerns about what they could do to try to make sure to try to help rein in. And I would hope most people who would look at what's happened with the financial crisis and even what's happened in the economy for the last 30, 40 years, it's not a coincidence that as we deregulate the financial sector, there's increased inequality. That happens all the time. And so, yes, we do need stronger regulation to deal with growing economic inequality, and it's hard to even imagine what would regulation that's really dealing with the growing racial wealth divide, right? Because, again, like, America's going to be majority-minority, and if you're having the majority of Americans with only $10,000 worth of wealth, you can't have a real middle-class economy in this country anymore.
I'd like to comment, but the Congresswoman just arrived.
Sorry, didn't realize someone more important.
So actually, we're just going to pause this segment of the panel because we have a distinguished speaker and guest. I think a leader, a woman, a public servant who needs no introduction, but I'll give a brief one, which is Nancy Pelosi, the Democratic leader of the House of Representatives. She was the former Speaker of the House. She's serving San Francisco for 26 years. She's the mother of 5 and a grandmother of 9. Madame Pelosi, please. And another sort of quick thing, the purpose why we convene this panel is to close the racial wealth gap, which leads African Americans and Latinos with only 5 and 6 cents, respectively, for every $1 of wealth held by the typical white family. We know that Nancy Pelosi is a big advocate here. In July, she actually launched an initiative around women and families, that when women succeed, America succeeds.
Thank you, Chitra.
Thank you.
Thank you all.